Hey, John, it's great to have you here at the RCN Capital offices in South Windsor, Connecticut.
Well, it's so exciting to be here, Jeff. I haven't been here in a while, and to see all that you've done here, the renovation of the office, the amount of people, the enthusiasm here, it's really great to be here.
It's so thrilling. You're beyond our green wall here, which is actually live. And it's the focal point of our employee break room, which is just super cool.
I can confirm it's all real.
I love it. So we're doing some video today, and I wanted to grab you and just talk to you about housing in general right now. 2022 was a challenging year from an interest rate perspective, especially with investors coming in, doing DSCR loans, rates going up, flippers not being able to sell into the marketplace, conventional rates going up. What do you see for 2023 from a housing perspective, both on the residential owner-occ side and the investor side?
Yeah, well, I think it's definitely, I agree with you, 2022, it's been a pretty tough year for the market. And I think we have some more of that, unfortunately, to come in 2023. When you think about housing, I think about it as really three main drivers of housing. Number one is interest rates. So interest rates have come up a lot over the course of the last year. I think you probably have more this year, probably stabilizing towards the middle of the year, I'd say. But there's probably more rate, in my opinion, coming over the first half of this year, which will pressure housing prices because it makes, obviously, housing less affordable for people. The second thing is really the employment situation. Our employment rate is great right now. If you want a job, you pretty much have a job in the country. But that likely is going to get worse over the course of the year as the Federal Reserve policies percolate through the entire economy. And so I think you're going to have a softening economy, probably a recession towards the second half of the year. That'll probably be modest, but that'll have an impact on people's ability to pay for housing. So that's a pretty big negative. The third thing we see, and this directly affects our business, is really the supply of housing. So that's the one thing that's a real big positive. In a lot of markets, you can't buy houses. It's very hard to buy houses. There's very little inventory right now. There's very little supply of houses. In part, that's because, frankly, people have bought a lot of houses over the last few years. Secondly, it also is because people have really low rates in their existing house, and they don't want to move and pay for a higher interest rate. And so there's a lot of people who are basically stuck in their existing properties, not wanting to sell that, making lower inventory. So I think you have two factors that are pretty negative. I think you have one factor that's really positive. My view is that those factors offset each other towards a softening housing market throughout 2023.
So do we think as 2023 unfolds that interest rates coming down from where they are today, and some folks today are talking about getting into the fives by mid-year, do you think that will spur, especially the investors who are buying, fixing, rehabbing, will that spur them to get back into the marketplace as the conventional market really begins to hopefully breathe some new life into it?
Yeah, well, for a rehabber, what you really want to see is you want to see a big spread between where you can buy the house and where you can sell it. So I don't know they necessarily care about the absolute level of housing prices, but they care about the differential between where they can buy it and where they can sell it. And I think until you see more distressed inventory, until you see more supply in the market, you're really not going to have the volume of deals that flippers can really find to really drive the market up pretty substantially. So I think you need to see some softening in the market before the amount of flipping activity sort of reverts to what we would have seen in 2021 or pre-COVID.
So one more question before I let you go. On the DSCR side, the rental side, which has remained pretty strong this year, do we see rents holding up to be able to support these valuations? And where do we see that unfolding?
Yeah, I do see strong rent growth throughout the year. I mean, you see, inflation is high and continues to be high. Rent's a big part of inflation. So just by that fact, you're going to see rental growth throughout the year. I also think the employment situation, while probably softening, still is going to be pretty strong. We have the supply-demand imbalance. There's not enough rental properties for our population. So for all those factors, I think rental growth is actually going to be pretty solid this year.
That's awesome. Thanks for coming by today.
Thanks, Jeff. Thanks for having me.